Hi everyone. So this was the lesson we were supposed to do right before we went on break, and I like this lesson a lot. It does two things. Number one, it helps you understand what taxes look like and how to file your own taxes. Even if you are using TurboTax or one of the other formats, it's really helpful for you to understand what you're looking for. It gives you an opportunity to actually bring in the right paperwork, have the right items available, and helps you save money on your taxes. So it's a really cool activity. Usually goes really well. It's right before April 15th, which is when taxes are due, and usually I find that to be a spectacularly appropriate lesson. This year we'll see what happens, but it also does a really good job of explaining how the government uses taxes as a means of helping to control the economy. So in order to understand that, I want you to look at the actual change to the tax code with the 2018 year. That's the changes that President Trump made. There was a lot of I don't know, drama about that. People saying that this was going to be the best thing ever for the middle class. People saying this was going to be a horrible thing for the rest of you. Whatever. I want you to actually see it. I want you to see it with real numbers. And so what you've got in front of you, this is a 2017 tax return. This is an actual IRS federal income tax. We're only looking at that one because that's the only one that President Trump was able to change. And I'm going to walk you through it. I'm going to do it kind of slowly, but you're welcome to go ahead and just follow along. Normally we would have done this in class on paper. I'm not making you do that. So the top part's pretty basic. This is how you find out what you're doing. And then the filing status, single, married, filing jointly, etc., head of household. Each one of those comes with its own value, if you will. I'm going to show you the tax tables to understand it. So these are available online. This is the 2017, but it doesn't make much difference whatever year it is. You're going to see them all filed a specific way. So this is what the tax tables look like. They tell you if your taxable income is here, at least this much, but less than this. If you are single, married, filing jointly, married, filing separately, head of household. Those things are going to make a difference based on how far you are in your income, and then they tell you what your tax is down here. So as you can see, in the beginning of it, it doesn't make a whole lot of difference. You're not paying a whole lot different taxes. But if we come down a little farther, say $30,000, if you are, I'm going to move up just a little bit. If you are single at $30,000, you're paying $4,000 plus in taxes. If you are married filing separately, you pay the same amount. If you're married filing jointly, you're paying the least amount. And if you're a head of household, you pay a little bit more. How do you know which one you fit into? Well, your best option here is to go ahead and contact a tax preparation group or person or your CPA. All of you, I'm truly hoping you're single, but for purposes today, we're going to be looking at married filing jointly. So let me take you back to our document here. We're going to do the married filing jointly right here. Even if they only have one income, you'll notice I'm able to check this box. And then it talks about exemptions. This matters because in 2017, 2018, the more exemptions you had, the better off you went. By the way, there's all kinds of other things if you want to explore them. I've given you an option for that PDF, but I wouldn't mess with that because we don't use this anymore. So you yourself, you are a dependent unless your parents are claiming you, so you need to know that as a teenager. Your spouse, hopefully none of you have that. And then we're going to go ahead and we're going to count up how many kids. For the purposes of what we're doing here, we're going to say that there are 4 dependents in this family, 4 exemptions in this family. And for what we're going to be looking at, we're going to go ahead and assume that this family is making $60,000. 1, 2, 3. There we go, $60,000. Wages, salaries, you'll notice there's a ton of different ways that you can earn money. We're not going to measure all of those today, but I'd invite you to stop and take a look. If you have, if you have tips, those are going to need to be in here as well. If you get alimony, if you get IRAs, if you get unemployment, all of those things are taxable. You come down here, far right column, this is your total income. And again, for this family, for this purposes, they have $60,000. This is your adjusted gross income. These are things you can actually deduct right off the top of your income. It's kind of nice. So for example, if you are paying on your health insurance, if you are having to move, by the way, there's a form for that. If you have a business expense, if you had tuition and fees for school, hey, that's an idea, right? And for this family, they don't have any, but that's okay. We know that that's still fine. We're going to still claim it as $60,000. And this is the end of your first page. We move to the second page, and all they're asking you to do here, 37, line 37. This is, again, you type it one more time just because you can, $60,000. Now, then we move over here Taxes and credits. You can itemize. By the way, they've got the thing here in 1953 that is none of you, and none of you are blind. Yay, that's a good thing, so we're not going to count that. Okay. Taxes and deductions. Now we're going to go ahead, and there's a lot of different ways to do exemptions and income and minimum tax and foreign tax and child tax and all of that. We're not going to do that. We're going to simply come over here to the standard deduction, and we're going to find the information here. So if you follow, right, single, married, filing jointly, head of household, we are looking at a $12,700 standardized deduction. So right here, we're going to go ahead and we're going to do $12,700, and we get to deduct that. See, subtract line 40 from line 38, and dun, dun, dun. Once you do your math, you should have $37,300. Yay. And then they talk about exemptions, taxable income. We don't need any of that. See here where it says exemptions, if line 38 is that much or less, we do multiply 4,050 by the number on line 6D. Well, 6D, back up here, 6D, the number was 4, right here. Those are our number of exemptions. So if you take the 4 times the 4,050, we should have $16,200 right here that we get to also deduct. And then taxable income, subtract line 42 from line 41. See why people were already getting headaches just by doing this? If I did my math right, oh, I didn't. This one should have been a 47. And that means that this one should now be, let's see, $31,100. Okay? If I've done that correct, we get all the way down here. Tax right here, okay, tax, the instructions. That goes back to this tax table right here. So $31,100, $31,000 and $31,000, but not over $31,000. If this person is married filing, $3,729 is what this person will owe. So $3,729 is what this person will owe for taxes. That is what a family of 4 on $60,000 would owe. All right, so pretty easy, right? You can see how everyone goes ahead and just has someone else do it. But we're going to try again. This time I want to show you what happens with a family exactly the same size with $120,000. Now remember, this is the 2017, so this is before the tax changes. So they would be filling all of this in, again, with all the information, married, yourself, your spouse, 4 people. And this time we're going to change this. Instead of $60,000, we're going to say that this family, makes $120,000 a year. So they're going to double their salary. We're not going to have any other items in here. We're not going to change anything else. No expenses. So we're still going to put the $120,000 right here at the end here. And we're going to carry it over onto the second page and do $120,000 right here. Okay. Notice we still have these same itemized deductions. Now, one of the things that happens is as someone spends or gets a lot more money, a lot of times they have more deductions. So that's where they have to go and talk to the tax person and see if it's actually better to take itemized or standard. For the purposes of what we're doing today, we're still going to take these standardized deductions. Notice that they still meet the criteria. So we are still going to take out $12,700 off of this person's salaries, $12,700 for their deductions. And let's see, I always have trouble with this part. 300 there, 13 should be 107. All right, that's how much money they're making with after their deductions. And then we're looking at exemptions. Notice here it's still below the cutoff line. We're going to talk about tax brackets and all of that later, but this is below the cutoff line. So we're still going to multiply $4,050 by the line 60. We already know that's 4. So I should have $16,200 here. Taxable income, I'm going to go ahead and subtract. And let's see, I've got my 107.16 should be $91,100. Okay, I think I did that right. Here we go. This is what happens when we don't have a calculator, right? By the way, that's how much tax they should owe. So when we come, that's their taxable income. We come back again to the tax tables, right? We were at 31,000 here. Now I need to go to 91,000, which is going to be all the way down at the end. There's an actual policy for when you don't have that. Here we go, 91,000, 91,000, oh, went right past it. There we go, 91,000, and should be $91,100. Yes, it is. So here we go, 91,000 less than 91,100, and we come to $14,246 that they have to pay in taxes. Okay, $14,296. It doesn't want to change. There we go. 2,096. Notice we have more than quadrupled their taxes. The last one was under 4,000. This one is over 14,000. Okay, this is a lot different. Oh, sorry, we've tripled. We haven't quadrupled, not quite, but we've added quite a bit to their taxes. Even though we only doubled their income, the fact is that they moved up in the tax brackets. There's another video for that in another spot, and I would invite you to look at that. So go ahead now, stop the video if you need to. Make sure you know the differences, because I'm pretty sure that's one of the questions, and we're going to trade off from here to the 2018 tax changes, and I want you to see what those look like. All right, we finished 2017. You guys ready to go for the new Trump era 2018? So in 2018, President Trump changed quite a bit with the tax tables and with the way taxes were actually filed. So I want to walk you through that. Remember, the goal here is two things. Number one, what does it look like to fill out a tax form? And I think we've pretty much done a lot of that. Number two, though, I want to point out, we want to be looking at the difference. What difference did it make both to the $60,000 a year family and to the $120,000 a year family with these changes to the tax system? So we're going to go ahead and start with the actual form itself. Yay, take a look at this. I'm going to go ahead and make this a little bit bigger so that I think it's easier to see. And I'm going to point out, this is a whole lot simpler. This is that front page. This is it. This is all you have to do. You fill this out. You fill in your dependents. You sign here. And this is for a paid preparer. That's it. So much easier. For the purposes of what we're doing, and here's the back side, for the purposes of what we're doing, we're going to keep it that simple as well. We're going to stay with the same 4-person family, and we're going to compare the $60,000 a year to the $120,000 a year and see what their taxes look like. So we're going to start off here, wages, salaries, and tips. You guys could probably be filling this in with me now with no problem. We're going to not worry about any of these, but notice we've limited so many. There's only a little bit of interest. There's a little bit of Social Security benefits. Unemployment's not in here. There's a whole lot of changes. So total income right here is going to be still $60,000 for this family here. Adjusted gross income, same thing, no adjustments. And then we come to standard deduction or itemized deduction. Same thing. There's a long list of itemized deductions. They changed with the 2018 tax code, but we're going to stick here. If you come over here, notice married filing jointly is now $24,000, but heads up, there is no change for the number of dependents. So we've added quite a bit here. Remember, we've doubled the standard deduction, but we took away the changes for the family size. What does that mean for a family of 4? Well, that means that they are actually going to wind up getting less of a benefit, if you will, to the tax code than a family, say, of only 2. So just my husband and I, we're going to have a better benefit than back in the day when we had multiple kids. So standard deduction is going to be $24,000 right here. Deduct that and add any amount. Taxable income right here, $60,000 minus $24,000 should give me $36,000. Notice this family now actually has a higher tax rate than what they had under the old format. You're still going to follow the same tools. We're going to find the tax codes, all the directions, all the things. Here we go, $36,000, right? But less than 3605. See if I can make this a little bit bigger for you as well. Okay, 36 but less than, let's see, where will we be at? Just straight up. Okay, right here they owe $3,942. Okay, that was their taxable amount right here, $3,492. They went up a little bit. Right? They're still a little bit over what they were last year, not by a lot, okay? But if this was this family of four, $60,000 a year, they wound up actually not benefiting quite as much maybe as one of the other families we're going to look at. This is one of those issues. Now it's only a couple, less than $200, $300 difference if you go back and do the math from the beginning of the video, which I know I'm asking you to do. But pay attention to that, because when people start talking about whether they paid more or paid less, who paid more and who paid less is actually going to be as much of a difference. So I'm going to go ahead now. I'm going to erase all of this. We're going to drop it all back off, and we're going to go back. And again, I think it's kind of funny because it's such a short one. I had to do this all without you guys watching it last time, and this time I can just do it here because, yeah, it's so short. Here we go. Here we go. We're going to instead, same family of four, we're going to do that $120,000 family. Okay, so still the wages, taxes, salaries, all the rest of that, they still get, notice the $24,000 right here. I've got my $120,000. I'm missing a zero there. And we're going to go ahead and deduct the $24,000 here. Nope, $96,000. Okay, I'm going to go ahead and I'm going to show you again the tax code right here. So same tax table, same concept. We're going to scroll all the way down to the $96,000 range right up here. Notice you go over 100,000, there's an even more complicated thing. And at 96,000, this person now owes $13,005. I'm going to fill that in here. They now owe $13,000. Oh, I messed that up somewhere here. Taxable income here should have been 96,000. Sorry, 1, 2, 3. And this family now owes tax, total tax, $13,005. This family saved somewhere in the neighborhood of over $1,500. Okay, that is a lot. That's almost 10% savings for this family. So one of the things that we're talking about with the changes between the 2018 tax code before and after is that the people at the bottom didn't necessarily, and I know $60,000 doesn't seem like a bottom, but if you start looking at where we fall in the tax code, the $60,000 is right up at the top of our lower income. So go through the tax code if you want, check that out, feel free. You may be still going, that's a struggle, that's still 2 incomes. A lot of times it is, 2 minimum wage jobs, it's still gonna be that. But then you start looking at the $120,000. A lot of my students are already talking about the jobs they want to have, and a $120,000 a year job, that's going to put you in the middle class. You're going to own a house, you're going to own a couple cars, have a couple kids, and, you know. But you guys get the idea. You're going to have that, and they've actually saved some money here. They've actually spent less on taxes. Now, how does this all fit into fiscal policy? How does this all fit into what the government's going to do? What do you think they're going to do with extra money, especially middle income family? They've got kids, they've got the house, they've got the car. If you've got an extra $1,500, you can go to Vegas for a weekend, right? Maybe you can go get a new car for your 16-year-old kid. Not that any of you guys are going to have that. You guys get the idea. The benefit of handing people back money in a tax form like this is the idea that they're going to go spend it. We have that in another video, and I would encourage you to go ahead and look at and find it. But I didn't go through tax brackets in this one. I didn't go through all the rest of the details. Those are in other videos that are available. This one was just to show you the difference between the 2017 and 2018 tax code, the change that President Trump did, who benefited, who didn't benefit. By the way, we're not talking millionaires here. None of this information falls for the millionaire. So I realize we're still talking base income, places where you and I are most likely to be. Although if you want to be that millionaire, don't forget who your econ teacher was. But this is the point. When they get money back, when you see this extra money here, and you do the math because you have to for the piece that I'm asking you to do, you're going to look at almost $1,500 that they got back over the course of the year, assuming that they earned the same amount and had the same expenses. At that point, this looks good for them. There's more money in their pocket that they can now spend, which is the point to fiscal policy and cutting taxes. All right, you guys just got a killer deal, a lot of tax information. You can now go out and do your own taxes. By the way, if you're 18, you can go get a job at H&R Block and do taxes for other people. They'll train you, and it's good money, plus it gives you a heads up. So I invite you to look and see if this was at all interesting or if it makes sense to you. Try it out yourself. Otherwise, I'll see you next time.